Hey guys, good afternoon, everybody. Today is Monday, August 7th. It is 2:05 right now. Our scheduled mentoring sessions for 2 o'clock. Just give me a few moments to finish setting this up, guys. I'm in a new area, so I'm setting up in this podcast room that I have at my place. Trying to figure out how everything works. So just give me a few moments to finish setting this up, and then we'll get started shortly. Couple things here I need to update. A bunch of security questions. Looks good. Now let's update this real quick. And we should be good to go. All right, let me get this link sent out to you guys here in the premium. And we should be good to go. All right, let's go. Get this link sent out over here. All right, perfect. I'll get a few moments for people to make their way in. And then we'll get started shortly. Mute everybody real quick. All right, hey guys, how's it going? Good afternoon, everybody. Today's Monday, August 7th. Sorry for the late start. I'm setting up in this where I set up in this new podcast room that I have here at my place. It took me a while to figure out how everything works. So fortunately, I still don't know how everything works. So we'll try to get through this as smooth as possible. But if there's some technical issues, we'll try to figure this out. I'll take a video and I'll show you guys what it looks like in here. All right, guys. So here's a mentoring session. I'm in the podcast room in my place right now. Still trying to figure out how these things work, but yeah, if you guys have any questions, feel free to put them in the chat and then we'll get started shortly. There's just so many gadgets in here. I've never used any of this stuff before. But yeah, let me just send you guys this real quick. All right. So let me check the chat, figure out how to open this thing. Hey, CJ, how's it going? Hey, Martha. Yeah, I'm in my there's a podcast room here at my place. And I tried using it, but I don't think I'm gonna come back in here. It's kind of complicated. There's so many things in here. I don't know how to use anything. It took me a while to get set up, and I mean we're here. So we'll have our session here today, and then I'm probably gonna go back to my office after because I thought it was gonna be easier, but it's actually really hot in here, and and there's just too much stuff to. There's just so many things to use here. I don't know how to use any of this stuff. I guess it would be cool if I did know how, but it's all good. But all right, guys, happy Monday, guys. Today is Monday, August 7th. Hopefully a lot of you guys made profit today during the live session. It was a pretty good live session today. If you guys missed it, I'm hoping it continues to be this way throughout the week. Last week was kind of a bummer, so hopefully this week will help us step things up. So, all right, guys, I'll get a few more moments for people to make their way in, and then we'll get started shortly with our mentoring session for today. So if you guys have any questions, feel free to put them in the chat, and we will get started with the questions as they come in. So yeah, I don't think there's really that many questions to cover today. I think the main thing that people wanted to see were pretty much the entries from today, and then some examples of momentum, the momentum pullback scalps, and then probably, I guess, liquidity. So if there's no questions today, that's probably going to be our main focus. Mainly going to be the entries from today and basically the strategies that were applied, which obviously you guys know which ones are: momentum pullback scalp and the liquidity push. Martha's asking, how long will you be gone? I'm only going to be gone for the weekend, Martha. So I'm going, just a reminder, guys, I'm going on vacation this Friday. So I'll be on vacation till Monday. Not that long. So we're probably just not going to have a live session on Monday. It depends on how the internet connection is out there at my hotel. And that's pretty much it. I mean, I'll be live with you guys on Friday. So I'll go live with you guys Friday morning. I'm going to fly out right after the live, and then I'll be back Monday afternoon. So no mentoring session next week and probably no live session, but everything back to schedule. Let's see. Rick is asking, what's the furthest you'll go back before taking a position on the momentum pullback? Sorry, Rick, I'm kind of confused with your question. What was your, can you be a little more specific with your question? So let's see, you're asking what's the furthest you'll go back before taking a position? Yeah, I still kind of don't get the question, Rick. If you could just maybe reword it a little bit to help me like understand what you're asking, because I'm not sure what you mean by what's the furthest I'll go back. And if you guys want to speak, just let me know. You guys, I can turn on the mic too. If it's easier for you to speak, I can turn on the mic. But if you guys just want to type, that's fine too. But yeah, Rick, I'll give Rick some time to in a moment to maybe rephrase his question or give it a little more detail before we move on to the next question. I'm just a little confused. All right, so let's see. So Rick is asking, it's usually 10 points at a time. Sorry, Rick, I still don't get your question. What do you mean by that? So are you talking about like how far am I looking for it to pull back, or am I looking like how far will I let it push up or push down, or what do you mean by that, Rick? Because I'm still not getting your question. Because I asked about like 3 questions. I'm not sure what you're agreeing to. Are you talking about how far will it pull back, or how far will it push up and then retrace? I'm looking for it to pull back for whenever we get an entry. There's no real set time for like how long we're looking for it to pull back. If it pulls back below the momentum, then obviously we're not going to look for an entry there, because you're just going to get an opposite momentum, right? Let me see if I can find an example over here real quick, and then I'll try to kind of break it down for you, because it's I think you might be a little confused with like with with where you're supposed to take it. Because the thing is, here, let me just pull up on my screen. So let me go over here to and I'll look at the entry from today, because it's pretty clear how far you'll take entries from. Like, we don't take any entries past momentum. I think that's kind of where you might be a little confused with, but that's kind of like as far as it'll go. Like, let me just replay to 8 o'clock, because there was a couple entries that came up today, but they were like at the momentum. So I think that's what you mean by it. But there's really no far pullback. I mean, if you're going to go below a certain point, and let me just look over here real quick. So, all right, so price pushed up right here, 630. Well, we didn't really look for entries until over here. So price pushed up right here, and then retraced right here, right at like, and let me just replay. I'll just replay from here so you can see it a little better. Okay, so price pushed up right here. See how this candle right here retraced at the 48 mark? If it retraced to the 48 mark, your entry would be at the 40 mark, right? So let me just try to break it down to show you where you wouldn't enter. So there's a 40 mark right there. There is a 30 mark right there. There's a 20 mark right there. But here's the thing, like, you're not going to get an entry down here, right? Because if you get an entry down here, it's just too far back. Like, you're going to take the first momentum from when price pushes through. So I guess to make things as clear as possible for your question there. So let me go and just, I don't even know how to trade on my laptop. I haven't traded on my laptop in a while, so I'm trying to, these functions are a little different. Okay, so let me just zoom in a little bit over here. Okay, so your entry would happen right here, right at the 40 mark. Right, you get where we're looking at. So if price pushes up right here, you get the retracement. Your entry would happen at the 40 mark, right? Basically, you're going to have a pending order waiting right there. So I mean, these lower levels don't really matter, because your entry is going to happen here no matter what. So your entry would happen right there, or if price drops lower in any circumstance, it'd be like somewhere down here. But so the area where I guess the farthest you can pull back, and I think you're overcomplicating it like a lot more than it needs to be, because the thing is, if price is up here, you're not going to look for an entry down here, right? And maybe this is because the examples from last week were closer to entry point, like it was closer to the momentum, but you wouldn't take any entries down here, right? I mean, like down here. So obviously you're not going to take an entry that pulls back to where this momentum is, because if that's the case, you're probably going to get a sell momentum by that point. So you can see how price is kind of bouncing around, comes back right here. Your entry would still be at that point, right? At the 40 mark. So price comes down, it fills it right there. And you see how that sell signal came up? So let me just go over here real quick and see how the sell signal came up right there. You probably wouldn't get an entry down here, because if that sell signal came up, you just wouldn't have an entry at all, right? So I think you need to just stick to the criteria, because I think you're looking for like, okay, what if price pulls back to this point right here, right? It doesn't matter. Price can pull back to any of these points, but if you get the retracement right here, this is where your entry would happen. If this red candle pulled back to this point right here, you could still take entry down here. It doesn't matter if it's on any of these levels. The only time you probably wouldn't take entry would be farther down here, because if price pulls back to this point where this buy signal is, then you're probably going to get an opposite signal. And at that point, you're going to have to close out for a small loss, or you're just not going to have an entry at that point. So does that make sense, Rick? I just want to make sure you're getting it right here, because the thing is, like, market was different from today than it was last week. So I'll show you some examples from last week, and I think that'll make things a little more clear. But for today, it was pretty clear. It was pretty straightforward, like these entries. Like, for example, right here, this is where your entry would be. Price pulled up, retrace from that point, your entry would be here at the 40 mark. You get your full TP. And that's pretty much it for that momentum signal, right? Again, right here, price pulls up. Let's see if we clean this up right here. Price retraced again at that point. So your entry would be here at the 80 mark. So, okay, so this is actually a good example. So with this point right here, this is as far as you'll go, right? You're not going to take any entries that are down here, right? Because this is the 80, here's a 70, here's the 60. You're not going to take any entries down here, right? Okay, I think this will be like the proper answer for your question. The farthest you'll go is to like where the momentum is, but it's kind of self-explanatory, because if you get a momentum pullback right here, or you get a retracement, your entry is always going to be the highest level. So your entry be there at the 80. You're basically waiting for price to pull back to that point right there. It comes down, fills it, and then actually, this is the trade that we took. So we took this. The only problem during this entry that we took during the live was that the volatility was super low. It was right at 13, so we actually pulled out early. But going back to that example, you would only take entry right here, right? Because you wouldn't take anything below here. So let me just go forward a little bit. So look when price finally comes below this level right here, right? So see how price comes below that level that I just mentioned? There's no sell signal, but you can see the sell signal is pending at this point. When the sell signal finally comes up, see where the sell signal comes up from? It comes up from these levels that are below the momentum. So the farthest you'll go back to look for entry would be wherever that momentum is. Like, you're not going to try to get in below here, because at that point there's no more direction, right? So if you look at the criteria, your first step is to confirm direction, right? Let me go over here real quick. Momentum pullback scalp. So for your first requirement here, you're going to identify direction using momentum and the trend, right? And you want to identify a push in that direction. So if you're looking for a push, the push has to happen after the momentum signal, right? So I think that's where you might be kind of overcomplicating it a little bit, because the second requirement here is to identify a push in that direction. If price pulls back farther than the momentum here, there's no push, right? Because at that point, like say, for example, here, price pushes up. There goes the push in the direction, right? If price pulls back below, like say to this point right here, below this level, then there's no push in that direction. So you'd never get step two. So, I know it's easy to overcomplicate, but just really follow the steps like as they are. Because like if you just go down the steps in order, you would see that there's like, it's impossible for there to be any entry if price does pull back below, this level right here, which would be the 80 mark, because there would be no push in that direction. So when you look at the criteria here, you might have a bullish confirmation. So you identify direction of momentum. Obviously right here, there's no more buy momentum, but right here there's still a trend. But look, going down to step two, you want to make sure there's a push in that direction. So like, for example, if I take everything off right here, just to clean things up, and you'll see where the push goes. Like whenever price gets below this, like the closest level right here, at that point, there's no more push in that direction. So there would be like no confusion if you were to look at this like in order. But it's okay, Rick. I mean, that's why I was confused, because I was like, how is he looking like far back when there's like, it's impossible because there's no push in that direction. So yeah, if you want to see another example, Rick, just let me know. I know it's a little confusing, especially if you haven't seen it enough and you haven't really practiced it enough. But that's kind of what you're looking for. Your threshold is going to be the momentum, because either or, price has to be above, the momentum and whatnot. Yeah. So that's it with that question right there. If you need some more guidance on that, Rick, just let me know. But I think you'll see it better with like examples. So I think in the future, guys, if you guys have a question like that and like you've seen an example and you're kind of confused, like why didn't this work? Just let me know what the example is so we can pull it up here on the chart, and then I can kind of show you, why it would work and why it wouldn't work, and why we wouldn't take a certain entry. So, all right, no problem, Rick. Let's see what else you got over here. All right, so we're done with that question right there. Martha's asking about the liquidity push. So we'll take a look at that shortly, Martha. I just want to get all of the questions regarding the momentum pullback scalps out of the way first, and then we'll move on to the next strategy so that we can just knock everything out at once. So let me look at the next question over here. So let's see. Martha's asking, was it because it was too close to market open and price wasn't stable yet? Here, let me see. So CJ said during the live session, you said at The 635 entry wasn't good entry, even though it hit TP, but I didn't get why. Let me pull that up. So we'll take a look at that. Let's see. So let's go over here to 635. And these are good questions, guys. I mean, it's good that you guys are asking these questions, because I'm sure other people have these same questions, but they're just like too afraid to ask. So if you guys have any question, as long as it's trading related, it's not going to be a dumb question. Okay. So I don't want to make sure that you guys aren't worried to ask questions, because you might think it's a dumb question, but as long as it's trading related, or related to the strategies, there's no dumb question there, right? If you have a question about FTMO or like a funding company, or about, something that I don't have control over, then that's something you should ask the funding company. But if you have any like trading related questions or strategy related questions, there's no dumb questions, right? But just make sure you guys keep it where like it's within relevance of like what I'm doing and what I'm teaching guys. Like, I'm not FTMO, so I can't tell you what FTMO would do in a certain situation, or like what a broker would do in a certain situation, because I don't have control over that stuff. But let's go over here. So yeah, so the question that CJ was asking, 635. Yeah, it was like this one right here. So price pushed up, pull back right here. Entry would have been at 90. That didn't actually close. Price pushed up. And then again, right here, it traced back to 12. And the next level for entry would be here at the 10, right? So, I mean, just looking at this from like the time point of view where it happened, I probably wouldn't have taken the entry here, because it was, for one, it was too close and it was too early in the session. So without even doing any analysis here, I would already say that I think one of the main reasons was because, I mean, price didn't really stabilize. You can see how it pushed up right here super heavily, and then it did retrace down. I think I was looking to take the entry here, but I looked at the clock and I was like, it's only 6:35. We typically don't look for entries until 7, right? I mean, at earliest, we look at like maybe 6:45, but at 6:35, it's just way too early. And I think the reason why I decided not to take it as well was because I didn't want to get FOMO, right? Because typically whenever I lose a trade, it's mainly because of FOMO. Because I did see the momentum here. Obviously, price was in a bullish trend. Price was above the pivots. Trend meter was green. Pivots were angling up. Everything looked good. And I think this actually did hit too. So price came down, it filled it, and it went straight to TP. So yeah, I think the main reason why, I can't remember exactly why, but I think the main reason why I probably decided not to take it was mainly because of the time of entry. Time of entry is at 6:35. Usually we have to wait for a bit for price to stabilize a bit. And it just never got close to I mean, it never got past that point. Because you guys can see typically between like 6:30 and like 6:45, the market still moves kind of crazy. Like you can see over here, it's still moving pretty wild. Between market open 6:30 and 6:45 right here. So basically between these two time periods, you can see how market kind of moves a little funky. Because what happens a lot of the times is you'll get a lot of fake outs between these periods. That's why I don't like taking trades around these times, because you'll see price push up and then it'll either fake out and continue pushing up, or it'll fake out and just completely reverse on you. So I think the main reason for that, CJ, was just because it was too early. If it came later, so say for example, it came over here at 6:40 or even closer to 6:45, not necessarily past 6:45, but if it came over here like at 6:40, 6:42, I would have maybe been a little more, I would have been more okay with taking the trade. But since it came a little too early, that's the main reason why I personally would have skipped it. I'm kind of curious. I think after the session, I'm going to go back and rewatch the live session. But to see like why I decided not to take it. But I think that's probably the main reason. And I didn't want to get caught in the FOMO, because I already had FOMO from like last week. You guys saw how I took that loss, like I think on I think Wednesday or Thursday. A lot of that stuff was FOMO. It's like it happened a little too early, and then the push in the direction wasn't even that far. I think that goes back to what we were talking with Rick earlier, was that like price pushed up, we had momentum, and the entry was like right next to it. Like it was on the same line, or it was below it. And then it just ended up reversing on us. So, I learned from my mistakes last week. And that's typically how everyone should be approaching the market. Like if you make a mistake, learn from the mistake and then make sure not to make it in the future. So that was just me being a little more careful. There was a lot of factors today, CJ. It was for one, it was Monday. So that's why I didn't want to take a trade too early. For two, it was too early. And then for three, there just wasn't enough. The market wasn't stable enough. Let me see what the ATR was at that time. So the ATR was kind of high. It was kind of high, but it wasn't that high yet. So it picked up between like 14 and 17, and then it got to 18, and then it started to slow down a little bit as we got farther into the session. Yeah, exactly. CJ said, okay, being too early makes sense. Initially thought that too, but the setup was too. Yeah, exactly, CJ. So the setup sometimes looks too good and you don't want to skip it. So it's just really up to preference if you guys are okay with it. For me, I'm very conservative. So I decided not to take the trade there. And it happened too quickly too. I think as soon as like the candle closed, it like literally filled. I think that was one thing too, CJ. I remember during the live session, I was setting it up. And then as soon as I set it up, it was too late already. I think I did actually put a pending order there, and then it actually it pushed out and it already hit TP at that point. I was like, okay, it's too late. So I just ended up canceling it. I'm not sure if it was this position or the one after it, but there was a position where I put a pending order there. It didn't fill. And then I was like, okay, I'm just going to cancel it. And I took it off. Yeah, exactly. CJ said plus market open was way down at 35,269. Yeah, because if price was to reverse from where it was, it would have came down super heavily to get back to this level over here at the 630 mark. So it was just all around is just a little risky. All right, so that's it with that question with CJ. Let's see the other question over here. So if there's any other questions regarding the momentum pullback scalp, guys, just let me know. We can cover it before we move on to liquidity. But if not, we'll just get to that next level or that next question of liquidity. And it's so hot in here. I just realized because it's so there's like 40 lights in here and they're super bright. So let me see if I can maybe turn one of these lights off. I turn this. You guys still see me? Okay, I think this is better. I turned off the light. There were so many lights on in here. I think my building said they spent like I think 20 or like 20 to 40K on like all the lighting and the cameras and the soundproof. It's like super soundproof in here. But I don't think I'll ever come back in here. It's too hot and it's just too much. It's overkill. Unless I'm like a real podcaster, then it would make sense, but I'm not really looking to podcast. All right. So the next question over here from Martha. She's asking, see, Martha's asking, can we talk about liquidity for a bit? When do you determine is a good one to take or not? When should we go for 100 or 300 pips? Yeah, sure. We can take a look at that. So I'll mark up liquidity from this morning and I will show you guys. I was looking for. So, I mean, there's a couple of reasons why a level would be important and not. A lot of this stuff is not like, there's no cookie cutter analysis for this. You have to actually know how to read the market and understand, what to look for. So what I'm going to do here is I'm just going to mark up the closest levels of liquidity here because it's pretty irrelevant. We knew where price went today, so it doesn't really touch a lot of these levels. So I'll go here from the daily. And what I'll do here is also mark up what level this is. This is weekly liquidity. Just so that you guys understand, what level this is. Daily. Daily. Eight-hour. I mean, price just went up from this point, so I'm not really going to mark up the liquidity from the bottom. It's kind of pointless. Mark up this one just so we have understanding where it's at. That's not established yet. All right, so I pretty much marked up all of the higher level liquidities. Go down to the 30-minute. Or you know what? Sorry, I think I did mark that up. Yeah, that was one on our 30-minute, 15. Oh, you know what? Sorry, guys. I didn't even go back to in time. Let me go back to I just realized I was market liquidity up until now. So over here, that's why the levels are looking wrong. They were looking incorrect to me. Okay, so we'll go back to 630 right here. Let's go down to the weekly. And I'm gonna do the same thing. I'm just gonna mark up closer levels because it's kind of pointless for me to mark up everything. We already know where price went today. Daily. I'm not going to mark up any of these other levels because they're not really useful to us. Minute, 15-minute, 10-minute. And I think that's pretty much it. You know what? I don't know, like, because there was a level that was right here. Trying to figure out. Here, let me go back a little further, guys, because I don't know where that level went. Daily's not there. Weekly's marked. 8 hours marked. I don't know if I marked up this one. All right, I'm a little confused where our entry was from today. Because I do remember it being yeah, I'm trying to see where there's obviously a level right here because we marked it up this morning. But I don't know why it's not showing up now. Weekly. Yeah, I'll just mark this one up. Maybe this was what it was, but I don't know why it's not showing up now. All right, we'll go down to the 30-minute. 15-minute. Yeah, I don't know what's. This is like the hard part about like looking at liquidity after it happened, because if you look at it every morning, we have like there's even lower levels right here. I guess we can mark this up right here. So this would be a low level liquidity, and I'll just use this as an example, Martha. I don't have anything here to. I don't know why the level is not showing up right now, but I mean this will pretty much give you an example of like what's strong and what isn't. So if we go back to the 1 minute over here. Yeah, I don't know what happened to that level. The level doesn't show up, but if you guys replay the live session from this morning, the level was obviously there because I marked it up this morning. It's just not showing up now after the fact. So I mean, I'll just show you what I'm trying to figure out what level that was, but daily, there's nothing there. Here, let me do this again. Let me go back to 820 because 820 was when I got on the live. Okay, 820. Weekly low was already marked up. And there's a level right there. So I marked up pretty much everything that's close by. Yeah, I don't know why it's not showing up on the screen now, but yeah, there was a level right here because that's one that we took this morning. But anyways, I'll just go back and answer your question. So let me see if there's B's asking, is it just a lower than 10-minute level? No, it was blue, so it was a high level. It was a high time frame right here. Because if it was a low level, it'd be red, but it was blue, and you can see where the line goes super far out. Because I don't know if it was a weekly level. It was a higher level, of course, for sure. 35,503. Thanks, Martha. I'll just mark it up. I don't know where the level is, but I'll just mark it up so that we know where that level was. 35,503. I don't even think that's even close to current price. Let me see. 35,303. Okay, there we go. Because 503 is super far up. So 35,303. So this is where the level was. I don't know where this level came from, but 35. I mean, it doesn't matter. Well, it doesn't matter where the level came from because that level was there this morning. But we'll just say it was like the weekly or whatever it may be, weekly liquidity. So I think that it doesn't really matter because that was the level from today that we took. And let me just go back to, yeah, Paul said he had it on the 2-hour markup on his. I don't know, for whatever reason, it's not showing up on mine anymore. Oh, yeah, it was right here. Okay, never mind. Sorry, guys. It was like right here, but it broke on open. So I didn't see the level there because for whatever reason, it didn't show up. But it was right there. Thanks, Paul. Yeah, and there it is. So it was actually a 2-hour level. Okay, I was tripping out for a second. I was like, why doesn't it come up on my screen? But it was there. All right, so we got this right here. All right, so going back to Martha's question. So Martha's question back above was, all right, so she's asking when do you determine a good one to take or not to take? When should we go for 100 pips or 300 pips? So The reason why I knew this level here was where I knew the buy here was going to be good. And the reason why I took it was because of the overall bias. I think that's probably going to be one of the main factors. So one of the main factors is going to be overall bias. Retail sentiment was, what was it? It was like 77% short. So obviously it was bullish. So, I mean, there's multiple factors here. It's not just this, but fundamentals were bullish as well. I think it was up like 300 points. Short-term technicals were neutral. Long-term technicals were neutral as well. So a couple factors here to look at when you determine whether, it's a good trade or not is to look at overall bias, of course. So we looked at this pre-market. We saw that retail sentiment was bullish. So we knew price eventually was going to go up. Doesn't necessarily mean it was going to go up right then and there, but you had an idea that price was going to go up. Second, the fundamentals were very bullish pre-market. This was Monday mornings. Usually it's not that high pre-market, especially on a Monday. Technicals were not really a big deal because the technicals, they'll tell you what's happening short term, but we don't really care what's happening short term, specifically for liquidity. So there's a couple factors there. A couple factors was the overall bias. The second big factor was what level of liquidity was this, right? If this was a red liquidity, like say if it was a 10-minute or 15-minute liquidity, then I wouldn't consider it a strong entry point, right? So, going back to your question, or your first part of your question is, when do you know when it's good or not? Main thing is to make sure that you're trading the direction of overall bias. If everything's bullish, then that's like one plus for you to think about. Second plus would be, what level of liquidity is that? This level right here was a 2-hour liquidity. So that's something that I possibly would be okay taking. The next thing that you want to look at would be the ATR, right? You want to see how price is moving. Obviously, this is pre-market. You're not going to see high ATR here. But I think on that first candle right there, when this pushed up right there, you can see the ATR pushed up a lot. So when you see a lot of, buying power right here and it's going the direction of your overall bias, odds of that pushing through even further are more likely than not. So in a situation like this, for the liquidity on open, that's typically the only one that you'd go for 300 pips, right? If this was a red liquidity, I would only go for 100 pips. If this was blue like it was here, then I would probably go for the full move. I have my MC4 preset to 25-100, so I didn't really have time to make any adjustments. If I did have time, I would have adjusted it for 300 pips because obviously everything here lined up. We had a strong bullish overall bias, plus it was a strong level of liquidity. So again, what I look for here is overall bias. I want to be trading that direction, of course. And then if it's a high level liquidity, then I would go for maybe 300 pips. A lot of the times I don't have time to make adjustments. Like this happened too quickly. If you guys remember from this morning, everyone caught it, but this thing kind of just blasted right through like that. So those are pretty much the main things that you look for. You look for overall bias, you look for the level of liquidity. If it's strong, then obviously you want to go for the bigger push. If it's lower, then you go for a lower push. If you go and rewatch any of the live sessions, Martha, I give like pretty detailed explanations whether to take 100, whether to take 300, whether it's risky, whether it's not. So I think you'd probably learn best if you just go back and rewatch those sessions. You don't have to watch the entire session. Just pull up, the live sessions and then just watch the first couple minutes of it. Because I pretty much explain every morning, what's probably going to be good entry or what's not going to be. So if you go back to like last week's, I think I went over like pretty much every entry. I do every morning and I explain whether it's going to be risky or not. But it's pretty much the same thing we're looking for. We're looking for overall bias, level of liquidity. And then, that first level is usually going to be 300 or 100, depending on the level, depending on the volatility. And then from there, that's where you kind of make the decision of what you want to take. But it's always like, it's always a little different. It's not always going to be the same, right? I can't tell you, okay, just because this is bullish and this is bullish, that you're going to for sure take a buy there, right? Sometimes price will come down and it'll come up and hit a bullish liquidity at some point in the future. So it's just, it's you have to like know what you're doing. I can't give you like like every time you take 100 pips here, or every time you take 300 pips here. You just have to listen to my analysis. Once you listen to my analysis enough, you'll probably know what to look for, because every market's different. It's not going to be the same. Like volatility right here where it pushed right through, you know, the same situation could come up again, but the volatility might be lower because the ATR before this was 7. We don't really know how volatility is going to move because it was Monday. Like we can't say, oh, it was moving quick yesterday, so it's probably going to move quick today because today's the first day of the week. So yeah, I would recommend to just, study those. If you really want to take these types of entries, just study them in the morning. If this stuff's too stressful for you, then don't even bother with it, right? Because we don't even take these as official entries most of the time. These entries only come up so often. So if you look at like all liquidity pushes from like last week and the week before that, I'm pretty selective. I don't take every single entry. If I think it's good and I think it's solid, then I'll tell you guys I'm going to take it. But I think even like last week, I maybe took it like once, even though pretty much all liquidity got hit yet last week. I think last week, every level of liquidity that I marked up got hit, but I didn't take it because, I have my preferences of like when I do decide to take it, when I decide not to. So yeah, Martha, if you want to go review those other sessions, but there's no, like I can't give you a guarantee like, okay, this is going to be a really good liquidity or not. So let me see if there's anything else over here that I'm missing. So let's see. Next question here is from B. So B is asking, do you have any advice for setting limits with price difference between YM and MC4 price? No, unfortunately I don't, because every broker is different. Like you'll see from all of my profits that they're like, it's like, I can't tell you for sure. It depends on like which broker you're using as well, because my profits vary. So like, for example, if you look at my profits from today, they're all different, right? I have 4 FTMO accounts right here. One of them I made all right, let me see. So I'll just look at that liquidity push entry. So these are all of my FTMO accounts. I can't tell you exactly like what to do, because if you guys put a pending order there, it's probably not going to fill like where you want it to fill. It depends on like how it's going to execute. So you can see my main account over here. I locked in 1,890. My second one 1,990. My third one 1,320. So there's no specific price point that you can set it to, right? If the market's too volatile, it's going to execute when it executes. So like you can see over here, like these technically these all execute at the same time. And you can see some of them are the same. Like this one locked in 1,990, this one locked in 1,990, and this one locked in 1,320. So I wouldn't necessarily put them as a pending order for like MC4. I would just enter manually. If it hits your setup on TradingView, then you would just enter manually. You'd hit buy or sell when it gets to that point, because that's literally what I'm doing. Like I don't ever set a pending order on TradingView. I mean on MC4. I don't think I've ever set a pending order unless it's like something that I can line up with the candles. But price wise, you can't really set a pending order because the price is always changing. Like sometimes you'll look at the price difference and it'll be off by like 10 points. Sometimes it's 10 points, sometimes it's 15, sometimes it's 12, sometimes it's 20. I mean, we've tried to do that in the past, especially during the live session. It's never going to be the same. So unless you're checking the price difference like at every single second, you're not going to get a perfect price point, right? So you're better to just get in manually by looking at the screen. Because I wish there was a better, because remember back then with like FTMO, like I think like when we first started using them, they had like a set price difference. Like the price difference was always off like by maybe like 10 points or like 14 points, right? It was like exactly at that price point. So you can put pending orders at those prices, but today they're always different. I don't know why is that the case, but it's always different. So I would probably just recommend that you enter in manually, because all my trades are manual. I never set pending orders. You can see that the profits are always around the same, but the slippage is just like crazy sometimes. Like FTMO is okay. So FTMO is actually one of the companies that I would be okay with like maybe trying to make a little like set a pending order, but just have it off by a little bit. But if you use something like my Henko account, right? So where's my profits from? Okay, so I don't know if you guys can see my screen. It's kind of far, but you can see over here, my FTMO locked in 2,000. Every account locked in well over 1,000, right? Well, my Henko trade account gave me -$2. And they've been doing that pretty much every day last week. So even though I was locking in like 200 or 300 pips in profit, they would still give me negative, right? The day before that, they gave me negative 200, or they gave me negative 294. Every account here got like at least like 1,000 almost. So, I mean, it just depends. But for the most part, I think for FTMO, I would just do it manually, B. Or if you really want to do that, then make sure that you calculate the price right before you take the trade. So for example, if you want to like set a pending order like right now, but the thing on top of that is that you have to make sure that the order gets filled like right then and there. Because if it doesn't get filled right then and there, then the price difference can change dramatically, right? So what you would do is you would just subtract, say if you're entering a sell, just subtract the ask price by your MT4. I don't have, let me see if I can pull it up on my chart or my screen. So let's see. FTMO right now. All right, so the price right now on FTMO is currently 35,487. So it's slightly different right now. So if you were to do the math, 35,487 minus 35,563. So it's off by like 76 points. It's a big difference, right? This isn't what we're normally used to. It's usually like 100, or it's like down to a set price point. Right now it's off by like 76. So like if you wanted to enter at a specific price B, you would have to calculate this and then calculate it into your price and then set that pending order. And then hopefully it fills within like a few seconds, right? I think you're better off just hitting buy or sell when price gets to that point. Because if you do that, if price changes and it's like, it goes from like 70-point difference to like 100 or like 200 in some instances, then because you got to factor in the spread too. This is just price, but you also have to factor in the spread. So, it's way too much work than just hitting buy or sell. I would just hit buy or sell. It's way easier that way. Or you can just listen for my entry too. Whenever I enter a trade, that's usually how I enter. If I hear the top steps say, order fill, that's where I hit my buy or sell button. I usually don't push anything until I hear that sound. Once I hear that sound, I'm already in the position. And that's pretty much how I set it up. Yeah. Yeah, no problem. All right. So if there's any other questions, guys, feel free to let me know and we can answer whatever else you guys need help with. Yeah, I know it's super annoying, but I wish all the pricing was the same. If there's an MT4, well, there's never going to be MT4 broker that will have it because they're going to keep trading on like these indices. But if there's a futures broker, like say, for example, if FTMO came out with a futures account and they trade directly on the exchange like we do here, then that would be perfect. Because then that would be a lot more aligned because you'd be entering at the same price. Let's see. B said, I considered going back to currency.com. Currency.com is not even around anymore. I don't think. Let me see if it's still on here. Yeah, currency.com is not on here anymore. They took it off like last month. You see, you wouldn't even be able to use currency.com if you wanted to. Yeah, they sent an email out like I think a month or 2 months ago. They took currency.com off. So you can't even use currency.com. I wouldn't use any of these other ones. I don't think any of these other ones are any better. ACAP for sure is not good. I would not use ACAP. I mean, maybe Pepperstone, but I probably wouldn't use ACAP. But yeah, currency.com, they took it off like a long time ago. Let's see, CJ's asking on the 5-minute overextension is 1,500 to 2,000, right? Yeah, that's right, CJ. 1,500 would be minimum down to 2,000. Because we typically go for like 1,000, 750 to 1,000 on the 1 minute. So like 5-minute would be like times 5 of that. So it'd be closer to the 2,000 mark, probably between like 1,500 to 2,500. That's where you would be. That's where you have it set at. All right. So if there's any other questions, guys, feel free to put them in the chat. I'm here to help you guys out. So whatever you guys need help with, drop whatever questions you guys have. I'll stay on for as long as you guys like. But I think we pretty much covered everything that we had lined up for today. I mean, mainly everyone wanted to see like an example of the momentum pullback scalp, which we did earlier from the entries today, and the liquidity push, which we covered with Martha. So, I mean, if there's any other questions, I'm here to help you guys out. So if there's anything else that you guys like, if you guys saw an entry today and you're curious, why didn't it work? Or if there's anything that could have been done differently, just pop your question. Because I want to make sure that you guys are ready for this week. Looks like the market was moving pretty smooth after 8. I mean, it's really hit or miss after 8. Like you can see over here between like 8 and 9 or 8 and 8:30, it was kind of choppy, but then it picked back up. I'm pretty strict with my trading now. I don't even trade after 8. Even if I have a win or a loss, I usually just stop at that time. But you can see over here between 8 and 8:30, a lot of choppiness. And then 8 to 9, you can see it started to pick up again before I got choppy. The ATR is super low around this time, so I probably wouldn't even have traded around this area. Yeah, I think the ATR is going to help a lot, guys, with us moving forward to determine when to trade. Because you can see there was some volatility here, but I still wouldn't mess with the market because the ATR was so low. It was like at 9 points. One thing that people were asking about as well was the daily entries. So, or not daily, the 1 hour entries. There was actually a lot that came up today and they all pretty much hit. So for you guys who are still applying, the 1 hour entry works well, but I just don't like doing it because what started to happen was I ended up being on the charts like all day. And that's what I'm trying to avoid. I don't want to be on the charts more than I need to. So like, for example, over here, trend was pretty much bullish all day. We had a buy signal pretty much since yesterday afternoon. So if you look at all the 1 hour entries from today, there was a 1 hour entry over here at 1 o'clock. There's one right there. That was a full TP. There's one, I think, at 12 o'clock too, which was there. Another full TP. So you guys can see that the strategy works fine. It's just I don't want to be on the screen all day. That's the whole reason why I stopped doing it. I mean, the strategy still works. It's just you have to be on the screen like every hour, which is it's just way too much. Like I'm trying to do the opposite of that, trying to be on the screen for as little time as possible. So a lot of these 1 hour entries did hit right here at 1 o'clock, 12 o'clock, 11 o'clock. Pretty much all of the 1 hour entries today hit. And also they're a bit of a high risk entry. So another reason why I don't like applying it, because your negative risk reward is like super heavy on this. But some of you guys asked about this earlier today. And yeah, I mean the strategy still works fine. It's just it's not something I want to apply because I don't want to be on the chart all day. So yeah, here are all the 1 hour entries from today. Another one here at 8 o'clock. Yeah, and they all pretty much hit for the most part. So 8 o'clock hit, 9 o'clock hit. 9 o'clock took a long time, but eventually did hit. 10 o'clock hit, 11 o'clock, 12 o'clock, 1 o'clock, etc. Pretty much every entry from today hit off the 1 hour entry. So, I mean, if you guys want to apply it, feel free. But, like I mentioned, it is a negative risk reward. So you have to be on it like almost every hour. Because, for example, here, if you took 1, 2, 3, 4, 5 wins, if you have 1 loss, you'll be at like 1 loss and 5 wins or 4 wins. And you would need to take every entry to pretty much cover it. Cover your loss if you end up eating a loss. Most of the time, you're not going to lose as long as you're like following the criteria properly. A lot of times people lose because they take a shortcut. Like they don't look at the 1 hour to see where momentum's at. Because right here, obviously it was bullish and they just look at the 1 minute. So as long as you follow the criteria properly, you should be fine. because usually it's going to push at least to that extent when price does go along. Let's see. B's asking, why is that was just because I didn't want to like mark up the entire chart, B, but they're all supposed to be 1040. So this would have been 1040. I just picked whatever was the closest because it was like right here down the list. Yeah, no, you would have to let the trade breathe. That's a problem with this strategy too, is that if you don't have the proper trade psychology, this trade will like, it'll stress you out. Like for example, right here, this 9 o'clock entry, this trade ran for, let's see, it ran for about like an hour. So, I mean, unless you're able to hold on to that and not like freak out and pull out too early, you're probably not going to do well with the strategy. So unless your trade psychology is like A1, you're not like going to get scared and pull out of the position too early, then I wouldn't even bother with the strategy, because the strategy is going to stress you out, especially if the spread's super wide. So for example, over here with the with this 8 o'clock entry, it probably would have hit your TP but not close out, and then it probably would pull back because the spread was probably pretty wide around that time, and then you'd have to wait for it to come back here. So you'd be holding on to this position in some massive drawdown for like about 20 minutes. So unless your trade psychology is really on point and you can really just buy and hold it, or take the trade and hold on to it for as long as you need to, I just wouldn't even apply the strategy. Sometimes the market dies down, like right here, you can be holding on to it for an hour, pretty much in some massive drawdown until it comes right back up. Let's see, CJ's asking, would you incorporate the ATR when taking the 1 hour strategy too? Not necessarily. I would incorporate the times of entry. So the ones during New York session are good. I probably wouldn't take 6 a.m. There's like certain times that I just don't take them. So I probably wouldn't take 6 a.m. because that cuts into market open. 7 is okay sometimes, but it depends if there's news. A lot of times there's news at 7 o'clock. So that'd be a time that you would avoid. And then 8 o'clock, there's usually news around that time too. So the times that I would probably avoid, or that I for sure would avoid, would be the 6 o'clock entry. The 5 o'clock is usually pretty smooth. I like the 5 o'clock. It usually almost always hits. So 5 o'clock, skip 6, 7, 8 if it's available. And then I usually don't take any more in the morning session because I'm usually off the screen until like noon. And then if I take it in the afternoon, I usually take it up until like 10 o'clock. If the entry doesn't come up by 10, or if there's an entry that usually 10 is a cutoff, or not even 10, 8 o'clock usually. Because if you hold on to the position from 8 o'clock until 10 during Asia, it's going to take like a couple hours to hit. So I don't necessarily use the ATR that much for that, CJ. I usually just trade and don't trade at certain time periods. So like 6 o'clock, usually skip. And then anything after 8 o'clock, usually skip, because you're going to have to hold on to it past 10 o'clock if you're trading Asia session. Yeah, B said would be nice if there was a way to improve the risk to reward, since it's such an easy entry set and forget. Yeah, I agree with you too, B. Trust me, I try to play around with it, but it's hard because during Asia session, the market's so slow, but it does hit. Like you'll see sometimes during Asia, it'll be running, but it'll take forever to hit. Like you'll be holding on to that position for like 2 hours. And I think that's the thing that kind of threw me off too, because it would stress me out. I would take the trade at like, so like say, for example, there's an Asia session trade. This is on Sunday, so obviously I wouldn't be trading on Sunday. But like say, for example, here on like Friday or Thursday afternoon, right? Say Thursday afternoon, I wanted to take a trade. A lot of times these things will be running for a really long time. So see if there's an entry here. There weren't really that many entries yesterday, but yeah, one way to make it better, if you would probably use the ATR. So the ATR, you would probably make sure that it's at least at 10, but a lot of times it's not going to be at 10 during Asia. Because if it's at 10, you'll probably hit your TP faster than other times. And that'd be during New York session, of course. But if you're trading New York, your ATR is always going to be above 10 usually, unless like you're trading like during dead period. So for example, here 6:30, you can look at the ATR at the bottom. It's at like 21, and then around 8 o'clock gets to 15, 9 o'clock, it goes down to 10. So you can see this is where it kind of dies down. 10 o'clock, 10, 9, probably would skip it at that point. and then 11 o'clock over here, it picks back up. So going back to what we were talking about with CJ, the ATR can be used, but I don't personally use it myself. Like you can use it to see where volatility is high. If volatility is high, you're probably gonna be able to hit 10 points pretty quickly. But if the volatility is low, you're probably gonna expect to hold on to that for an extended period. So let's see. B's asking, wonder if it'd be better on the 45-minute or something. Might get better entries. I mean, you could try it out, B. That sounds like a lot of work from. So I wouldn't. I mean, I wouldn't want to test it, right? Because and that's a whole different strategy at that point, B. Because the 1 hour entry is based off the 1 hour volatility, because the market typically moves on the 1 hour. So like whenever you get to the 1 hour mark, there's usually some movement there because the candle closes, like the 1 hour candle, right? So you get some volatility. The 45-minute candle is kind of like a random time. That's a like super random time to be trading. And they always fall at a different time period. So if you look at the 45-minute, like you were mentioning, like they don't always fall on like on a whole number. Like for example, if you sometimes it'll start at 11:15. I would not be looking to take a trade here at 11:15 because you can see it's pretty much just flat the entire time. So I mean, if it's something you want to test, you can test it. You know, feel free to test it. You guys have access to my tools, and you guys can put together your own strategy if you really want to. But I think the 45-minute is such a random time. I wouldn't even bother. If anything, I'd look at the 30-minute, not the 45, because at least a 30-minute, you get the 1 hour open, and then you also get like the midway point. So yeah, the 45 is kind of random time. Yeah, exactly. B said maybe the 30-minute or the 2 hour. Yeah, you could do that. It could be, I would probably, if you want to test it, it'd be at like a whole number. So 30-minute, 1 hour, 2 hour, 4 hour, even daily. Because what you're looking for is you're looking for the volatility push when a new candle opens. So like 15-minute wouldn't really make sense. 45-minute wouldn't really make sense. Anything on a whole number would really make sense because the thing with this is that you're kind of timing it with the options market. Because sometimes, you know, options contracts end on the hour, or you've probably heard it before, like people try to avoid trades on the hour or off the hour because that's usually where the price starts to spike, right? And if you're getting in at the hour mark, it's usually going to be enough of a spike for you to hit your TP. So like say the 1 hour, the 1 hour candle closes and then you get that big spike. That's why if you look at the entries here, let me see if I still have them marked up. A lot of them, so you can see how a lot of them, they just hit immediately on open. So for example, right here, this one at 12 o'clock, it hit immediately on open. Right here at 11, immediately on open. 10, 9 and 10, kind of slow. 8 o'clock right here, immediately on open. So yeah, if you want to test it out, you know, feel free. You guys are welcome to test out whatever you guys want. If you guys have a great idea and it comes up and you've tested and it works, you know, bring it up to me and I'll bring it up to the team and then we can test it for you as well. So, I mean, we're all here to help each other out, right? If you guys have an idea, bring your idea to me if you've already tested it. But if it's just an idea, you know, go and test it first. And then if it works for you and you have data on it, let me know. And then I'll bring it to the rest of the team and then we can like make it even better. But yeah, guys. All right. I think that's it for the questions. If there's any other questions, you know, feel free to put them in the chat. Otherwise, it looks like we're going to wrap this up pretty soon. There's just nothing else for us to cover right now. Yeah, if there's anything else that you guys want me to review, you know, feel free to pop into the chat. All right, so I think that's it for the day, guys. So, all right, guys, if there's any other questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow for the next live session. But yeah, that's about it, guys. So, all right, guys, have a great rest of your day, and I'll see you guys back here tomorrow, same place, same time for